Welcome back. Episode 18 of Making Sense of Your Money. Super excited for who we have today. It is going to be a friend of mine, someone who has been in the insurance industry for over 16 years, various roles as both an agent and manager. We both share the same alma mater, Fredonia. So shout out to that. And his name is Brad Waldron, and he is the sales director at P&C Insurance. And really the idea of why I wanted to have Brad on today was, in reviewing clients, different financial situations, one of the questions that we always get is, what about P&C coverage, right? My property, my casualty coverage, whether it's auto or home. What should I be doing there? And that's not a line that we work in, but obviously is a really important part of helping people and working within their financial plans. So we've got great partnerships out there in different lines of business, and Brad and his team have been a great asset for us in helping some of our clients navigate that. So jumping right in, question number one, Brad, which is, we've heard recently about some of these roadblocks of first-time buyers, getting coverage, whether it be auto or home. What's going on with that? Can you give some insight?
Yeah, definitely, Elizabeth. It is. So as you said, I've been in the industry 16 years, and this is the most unique, probably turbulent time I've seen in insurance in that time. What's happening right now is with record levels of inflation across the world, with people driving with cell phones in their hands, and with just accidents in general. I mean, you're seeing costs of insurance heavier than we've ever seen before. So just give you an example. I mean, we had a claim a couple of weeks ago. A side mirror came off a vehicle. Now, I remember at one point, this is many years ago, I had a mirror come off my vehicle. It was $200-300 to get it back on. That was over a $3,000 claim just to get a mirror on a vehicle. So what's happening right now is the insurance industry is, I guess, for lack of a better term, underpriced for the market we're in right now. So also, being in New York gives us like another set of challenges where it's hard to, it may not seem it to a lot of people, but it's hard to raise rates in New York. It's hard to raise rates. And so what we're running into is a lot of insurance companies. Listen, if you're asking my opinion, if every insurance company could take 20-30% rate increases, they would right now. You can't do that though. So the only way to kind of stop the bleeding right now for a lot of companies is to limit the risks they're willing to take. So what that means is every insurance company is looking for that preferred customer right now, that married, couple cars, the homeowner. And what's happening is those individuals who are maybe your first time drivers have a few tickets, low limits. They're running into situations where many situations can't get insurance. I can tell you, we represent multiple carriers. I can count on one, maybe two fingers, how many will actually take somebody with state minimum limits or no prior insurance right now. So that's what you're seeing. I think the insurance industry is trying to adjust, but it's very difficult to get insurance if you're not I know I keep saying preferred risk, but that's really what they're looking at right now. So that's kind of gives you an idea of what's going on.
So what would you say to like those individuals, right? So primarily, our demographic, and maybe a lot of the people listening to this, is kind of that retirement red zone, right? It's, the baby boomers, things like this. But for a lot of these people, this is their kids, right? They're trying to maybe get them off their payroll and get them their own insurance. So what should their kids be doing to help position themselves? Is there anything they should be watching out for with this?
I think there's three things to think about there. Number one, shop. I know you can't get in your car, turn on your TV without seeing a commercial for insurance. Every company is going to rate a little bit differently. So if you're a first-time driver, I would say get 5 to 10 quotes, see what that looks like, find the best rate. Number two, any discounts you can add on there. And, you may look at any young driver and say, well, I don't need driver's ed. No, take it. That's 10% discount. Defensive driving course. A lot of people look at that and think they get enough points for their license. That's another 10% discount right there. And you spend $25, you can do it online. And I think when you look at that, I think the third piece of it really comes down to, you're going to run into situations where, okay, best price might be state minimum limits. Okay, well, that may be your best price now, but if you get those state minimum limits, you're going to be at a spot when you shop that the next time, your market's going to be severely limited because people aren't going to want that, and again, something to understand in insurance, it's a responsible choice to choose higher limits, and companies reward you for that. So I think it's just shopping and just stacking up as many discounts as you can.
Okay, awesome, thanks. And then you mentioned, first, right, which is if everyone could probably take a 20 to 30% increase right now, these insurance companies would. Like, what is your best expectation from what you're hearing on what these rate increases maybe could look like, whether it's in the short term here, in 2023 or into next year? What are your thoughts?
So you mentioned kind of like the boomer generation. I think the toughest conversations we have right now are the ones who, I've got a perfect driving record. I've never had an accident. Why are my rates going up? And the answer is because everybody's rates are going up. No one likes that answer, but that's the answer. That's realistically the answer right now. So regardless if you have a perfect record, you're going to see that. Now, it's going to vary company to company. I can tell you what I'm seeing across the board. There's a little visibility when companies do file for rate increases. Earlier this year, I think all but a couple companies took double-digit rate increases. So for all your listeners right now, I'm sure if they looked at their most recent renewal, or if they haven't got one yet, they should expect to see anywhere from 10 to 20%. Okay. Now going into next year, the hope is, and again, maybe this is going too far, but New York allowed companies to take a rate increase, earlier this year. They're going to allow another one later in the year. So I do think companies are going to try to get another 10 to 20% between now and the end of the year. So I think when all is said and done, I think insurance rates in general are probably going to move about 30 to 40% above where they were a couple of years ago.
Okay, so that's going to be some sticker shock, to say the least, right?
Yes.
So you've got that individual, right, or couple who, are maybe going through their finances for retirement. Maybe they're preparing to figure out, okay, what's our budget look like? And then they get one of those bills and say, maybe what you said, which is, hey, I have this perfect record. What the heck is going on, right? What should they do? I mean, is shopping still a thing even in that situation? How often should people be shopping and comparing rates? What are your thoughts on that?
Yeah, 100%. I think, your best choices, and again, my opinion here, nothing wrong with, your carriers that just write the one carrier, but realize they just write that one carrier. So, think about your Geicos, your State Farms, your Allstate. That's all they have. So if you're with one of those carriers, chances are you have their best rate, which they can give right now. So, in our world, for instance, we are a broker, we are an agency, we have, a ton of carriers we can shop. So those individuals, I think, understand rates are across the board. Every company thinks they have the best rating model, whether it's Progressive or Liberty Mutual, they think they rate the best. So that said, they're all going to price differently for different people, so they're going to look at it. So, well, you may look at it and say, my rate here was $2,500 and it went up, 20%. Okay. So now you're looking at an extra $500 on there. Okay. Don't just accept it's $3,000 because you may see that, Travelers, and I'm just saying names here, whatever, Travelers may look at that and say, well, you have no tickets, no accidents. We'll give you a $2,200 rate. So I think the reality is we're seeing right now record shopping in this business. Like right now, insurance has never been shopped like it's being shopped right now. So I personally, when we look at this industry, and I hate to say this being in the business 16 years, but loyalty to a company does not help you right now. It hurts you. Going forward, rule of thumb, you should shop every 3 years. And right now, if you're seeing these rate increases, which they probably will be, shop. What's the worst that happens? You get a quote and you find out you're in a good spot. Or you find out there's hundreds on the table because this is money you're just throwing out there right now. And everybody's looking to cut back somewhere. So just understand, you're not locked in. If you get that sticker shock, see what's out there. There's not a ton of benefits for being loyal in this day and age. And that's the truth.
All right. So prepare for sticker shock and prepare to shop around. Got it. So, the third thing I wanted to touch on is, a lot of kind of what we do is that retirement income planning focus, right? Looking at distribution planning, what's the best way to kind of position the assets that you save to make sure that they can last for the rest of your life. We need to make sure they have enough resources to do that and make sure that we implement plans to make sure we can get from obviously point A to point B. But there are these unknowns in life, right? These things that can happen that are out of our control that can maybe put a damper in some of these plans, right? We obviously handle disability insurance for clients. We handle, life insurance to help try to mitigate some of that. But there's other maybe challenges out there too, and things that we want to be aware of, on the P&C side. And one of the things that we've talked about, Brad, I know in the past, is making sure clients have appropriate amounts of coverage and potentially even adding on, umbrella policies. I think there's a lot of maybe confusion of how those work, how much people should have, how much is maybe too much or not enough. So kind of give us maybe the 101 on how umbrella policies work, where you can see them being best positioned, and what people should really be looking for.
Such an important question, Elizabeth. I think we talk a lot about, growing your money. How do you grow? How do you maximize your assets? But what's not talked about enough is protecting that. I mean, let's be real. We live in Buffalo, New York. Okay. We get some inclement weather. You can be the best driver in the world and you can still slip on a patch of ice and hit the wrong vehicle. So when we look at it, I think there is an element that a lot of people don't always think about with regards to their insurance, because they think, well, it's not going to happen to me, and the reality is, I'll put it like this, I'm a dad. I got 3 young kids. I got 20 years left to work, hopefully. I think that's right. Yeah, about 20 years left to work. If I'm driving home today and somebody, maybe they're, maybe a text comes in, maybe something on their radio, whatever, those things that happen when we're driving, and they're just not looking and they rear end me. And I can't work. I can't do my job. I can't go home and pick up my kids. I can't throw the ball. All these plans I have for the next 20 years, they're gone. And I got a family at home that's relying on me to support them. So what am I going to do? I mean, I don't care who it is. I'm going to find the best attorney and I'm going to sue for probably, I'd say $1 million plus. $1 million's on the low end there. And I think a lot of people hear that and they may think, well, okay, I don't have $1 million, whatever. You don't need to be a millionaire to be sued for $1 million. And a lot of lawsuits in those, I mean, we're in a very litigious society, this. And in those situations, those lawsuits a lot of times will start at $1 million and go on to what those limits are. Now, what can happen in there for those individuals that have worked their whole life to build this nest egg, that retirement, that can be gone in an instant because of an accident. And so that's that individual, the individuals that may not have that $1 million, those individuals, just because you don't have it doesn't mean someone can't garnish your wages the rest of your life because of this mistake you made. So insurance is super important. And I know that's not something a lot of people think about, but rule of thumb, carry an umbrella policy. An umbrella policy, I mean, for 2 cars and a home, which is what most people have, you're looking maybe $200-300 a year to cover yourself for $1 million. I think you ask how much. I think $1 million is a good start, but I think you look at your assets. What do you have to protect? If you have 3 to 5 million or 10 million, whatever the case may be that you want to protect, that's what you should have. You should have enough to protect your wealth is really what the reality on it. So, and again, like I said, think about that, $1 million. I mean, where else are you going to buy $1 million in coverage for $200 to $300? And you hope you never have to use it. But at the end of the day, if that ever happens to, you or anybody, you can sleep well at night knowing you're not going to lose everything you worked for.
Yeah. I think what resonated with me is you don't have to be a millionaire to be sued for $1 million, right? I think that hopefully that's a takeaway that I don't think a lot of people realize and really have to look at, right? What is my value not only today on paper, but what's my future value, right? What are my earnings value, things like that I have between now and retirement. So yeah, that's great, Brad. So a lot of info. I appreciate it. Thank you so much for coming on today. We're going to have your info up at the end here so that if people do have questions, I'm sure you'll be more than happy to kind of help navigate them through this process, because there is a lot that we unpacked here today. As always, continue to follow us, listen in our podcast. We've got some great guests here, and obviously subscribe to the page. And as always,
go Bills.